journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we've been talking about this chart for the last couple of days. You'll notice our far left over here where the bottom was, that was November of 2024. There was your 382 retracement here. The actual number was 0.40. That was within about $6 of the exact. It hit it exactly, went a little bit below it. And then we had the move that we've seen today over the last year and a half, and that's where we hit a high today. Yesterday, the high measured, you write this down, folks, $4,081. That's where it measured to, okay? Now, the high yesterday in the gold was $4,081, exactly. Now, let's just play kicks and giggles here. We're going to bring this gold up today because I was fortunate enough to help a couple people on this. Wow, I can't believe. Let's put the hourly up here so we can see it here. Okay, there was our high here at 481. That the actual high was 481 even to the exact thing. We've had a big break here today. It's bigger than any break that we've had so far. Going back to here, going back to here, going back to here. But let's see how it did it. Because one of the things we always talk about is to watch for 382 retracements. And folks, guess what? Guess what that is right there? You can see it right on the money, right there. There it is, right there. Now the market breaks down. You can see here, what do you have here? Another 382 retracement. And look what happens as we come down. Folks, we're $100 in one day. Now we've seen $150 in one day, but it's been a long time since we've seen $100. That is very strongly suggestive that this is probably a major top. See, this ABCD measured to 407.7, but the big one, the one that we were looking at, measured to 4.80. I mean, boy, that means something. So once we broke that, you can see how much we've come down, and we're still coming down. You can see there's the 382, the real key 382 from a long time ago. They even have that in there, because if we get below that, that'll be the first time we broke. That number is 39.67 going on right now. Shane's got a problem connecting. Son of a gun. I hope he's going to get that done. Anyway, we'll try to get it done. I can't do it. I'll have to wait till the break. Anyway, this is the key level. I'm going to put this in because it might hit sometime today. But if we get below that, that'll be the first time we've broken a 382 in a very, very long time. Now let's take a look at the silver market too. Okay, we're going to come up and take a quick look here at the silver. Probably because a lot of these metals are doing the same thing. We might as well look at them all. Okay, here's silver on the 60-minute chart. Whoa, boy, look what happened. We made a new high today. Look at this, folks. We make a new high. Oh, we hit $50, $49.96. Are you kidding me? Was that it? $49.96 was the high. And look where we are now. We dropped $3. That's $15,000 in silver in 1, 2, 3, 4.5 hours. That's not a good sign. Look at this on the weekly. By golly, shut the front door and raise the rent. There it is right there. Within 10 cents, 15 cents of the exact high that we made back in August the 11th of 2011. Okay? This could be major reversal. Well, for someone that's long, it's a major reversal. That's 15,000. That's 15,000. So anyway, that's what we're paying attention to here early this morning. Now let's take a look at the copper, because copper, okay, there's several people that can't connect and they're asking me to help them, but first of all, I'm not technically adept to do that, but let's get the copper up right here, and let's get put the 60-minute up and see where we are. Well, that's had a big break here. Let's see what we've had here in the copper. That's 60-minute, move it over a little bit. Let's go to the daily. Let's go to the daily here. Hold on one second here. We'll get the daily up and see what we hit on the daily. Oh, the daily almost. Let's refresh this. Hold on just a second here. There's where we are right there. We just missed the 618 retracement here by missed it by about 7 cents, but here's where we are right now with the copper. So this might be a big thing in the copper, so we'll have to do one thing at a time. But the fact that the silver has broken that much in that period of time tells you that there's some type of top that got hit. Now, I want you folks to just do me a favor. I'm an old cowboy, been watching this stuff for a long time. Sometimes I know something, sometimes I don't. But I'm going to share with you something that I think means something. I'm going to come up here, and we're going to bring up the chart here. Oh, here, and I think I got it right here. There it is right there. There's Bitcoin, folks. Now, let me go to the 4 hour on this because that's the one that I think is controlling the whole thing. Now, I know Bitcoin, you're not even involved in it or anything like that, but it's affected a lot of different people. So let me come over here and show you what I've seen happening here in Bitcoin in the last few days. And I've posted this several times. There was a perfect 3 drive to a top, folks, just absolutely spot on. Drive 1, drive 2, drive 3, and you have a perfect A, B, C, D coming up there at 26,000. Then you break down, okay, and then the last couple of days, you have a rally right back. There's your exact 61% retracement, and now we're starting to break down. And that means that you're looking at this. Oh, shut the front door and raise the rent. Let me try to get this up here. I got to remember I'm in a different system here for a second, but that'll mean that you've got a price objective to watch here and move up to there. And that means that you're going to be looking at least right here. We're not very far away from it, actually, at 18,675. So remember, we had a low down here at 107 and went all the way up and made new highs. And now we can see that there is your pattern right here. There's not a head and shoulders here because there's not any symmetry, but there's your 61% retracement. And this morning you had another one. It went up to the 786. So that also could be coming into what we're watching as we see these things here unfold. So let's get back here and take a look at some of the other things that we want to be talking about. But these are big moves. Wow, look at, see, the gold is still coming down here. But there was your three. In fact, if you look at this on a real short-term basis, you'll see where it really broke down from, which was right in here. See, there's the gold telling you down $100 on the day right now. Hold on, get this out of the way. I got to turn that off because otherwise it's going to bother the heck of us. Okay. All right. There was a 382 this morning that we were chatting about just a little while ago. Okay. There it is right there. The number was 4040. It went as high as 4042. And then you can see what we've had happen here. We're cascading down, and the fact that the silver is down this much in one day, coming off that weekly reversal, that's big time thing. Now, the reason why I ask you to think about this, what if all these things like silver and gold and Bitcoin and stock market are all coming together at the same time? Because I've been looking for this big cycle. Maybe this is it. So let's keep our fingers crossed and see if we can make some money off of it. But we're doing okay in that stock exchange with the Dow Jones. Let's see if it's held that level or not. And well, I see the S&P's made a new low. So let's see if the Dow Jones has cracked that magical number. No, it has not as of yet, but it's right. Oh, yes, it did by just a little bit. We got down to 65.35. So it took it out by a little bit. It could hold right here.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN. educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, this is the euro. We've been quite bearish on this for the last couple of weeks, as you can see, actually late September, but we've come down to some really significant support here. You can see here over the last few hours, it's stopped making new lows. That may or may not mean anything at all. What I was doing this morning was just looking how the AI had picked out this move down. As you can see, it should have bottomed in here, but you can see the rally here is quite meager. And if we take this out, that means it's pretty much over, but that was another 382 off of those numbers that we had here. But let's look at this on the long-term weekly, because that's what we were watching for, okay? There's that level that we were originally selling right here. Here's where we are now. We're now at below the 61% retracement. Let's get it up here on the daily. You'll be able to see it. There's a number right there. You see, that's what held it so far, 155.48. That's been the exact low. All right, so if we get below that, that means we're really starting to go down. That means that we're probably going to go down even further. So if you mark this from this high to this low, you'll see if we break below that, we're going to go down to 5072. Now, if we take the highs and lows, there's your low, there's your high. You see, that's going to bring you in right to the exact 786 right here. Now, why that's important is if we take a look at the US dollar, which is the reverse of this, and we're just going to move over here, get the US dollar and see where we are here. And let's put that up on the daily so we can see that. So we'll be on so we're looking at the same thing. Okay, now there is the number on the dollar. You see how this is going up? Now look at this. See, the dollar is actually moving faster than the euro. So because the euro hasn't made new lows today, it's actually held, well, it's only jumped about 40, 50 pips, but that could be important. But there's your number right here. If that's the case, what we're looking at now, I know you find this hard to believe, but if you ever read Andrew Lowe's book, the non-random walk down Wall Street, the markets are chaotic, but within the chaos are non-random patterns that repeat. Now we see a random pattern over here where the market made this huge ABCD right there, didn't it? Okay, there's your A, there's your B, there's your C, there's your D. Okay, measure it. It's going to be absolute spot on. You'll just see, all you have to do is increase that by, remember we got that big move coming off of BC. So this has to be increased by 1.27. So if we do that, we'll just come over and from 1.27. Ensign built this software for me 40 years ago, God love him. And there we were, look, the high was supposed to be at 10118 and it came in at 10011. Well, this is one of those times where, it didn't work. But anyway, all we're going to look now is just to take this move like we had here and bring it right over here. Okay, you see how that's going to be pretty much the same thing. If it gets to that, that's a repeat of that move. But if we don't get any higher than that, and that's where we are right now, from your high right here to your low. Oh, Larry, hang in there, misdemeanor. Okay, there's where we are right there. We hit the exact 786 just a little while ago. So that to me is a very important thing, to be paying attention to here this morning. Okay, we'll get this out of the way right here. And then we got a few minutes here before we got to cover a few stocks. Of course, Tesla, NVIDIA, and there was Tesla, NVIDIA, and Microsoft. Let's move, and Goldman Sachs. God, I got 4 of them here. Hold on just a minute. I think we got Softy right here first, don't we? There's a G. Okay, here's Goldman Sachs. Now, this is a really big one in the Dow Jones, folks. So, and as you can see, it's getting hit a little bit today. I mean, nothing dramatic, but that's what's happening. There it is right there. And all it's doing right now is probably coming down to a 382 of this move right here. Let's just double check it. And there it is right there, setting right at the low today. There it is. We start getting below here, then that means there's something probably wrong. But that's what we're setting at right now. And remember, the Goldman Sachs is the most expensive stock in the Dow Jones Industrial Average. And you can see it used to trade at 822. Now it's at 775. The next one we want to look at is the let's get up here to Tesla next, because that's always, everybody wants to know what's happening to Tesla. I don't know whether it's up or down or not, folks, because I haven't had a time to look at it. And there's where we are right here. And it's actually down fractionally, not very much at all. You can see there's where we are today in Tesla, not down very much at all. Okay, and then the NVIDIA is the next one, and then Softy would be right after that. And let's get up to NVIDIA. The NVIDIA did make new highs by a substantial amount today, folks, I believe. Here's where we are, NVIDIA right there. I will hit 191, I believe. Yep, see, we did make a new high. There it is right there. You can see NVIDIA just made a new high. And as you can see here, we've had this pattern in here. Let me get rid of this volume stuff. I don't follow that stuff very much. There you go. So there's what we're watching here in NVIDIA. We had the ABCD. Oh, dear, my goodness. See, here again, you think this ABC stuff is good, and then it misses. Look, it's supposed to go to 193.99, and what did it do? It went to 195.30, missed it by $1.10. Well, I'm going to start using something else tomorrow. But anyway, that is the ABCD pattern right up in here. They don't work all the time, folks, but when they do, boy, they do work good, okay? So let's remember that. And now we want to take a look at the final one, which is Mr. Appel, who's down by the well, and we'll get that there. I should tell that whole joke, but I'm afraid I'll get banned on the CFTC, or CFTC, TFNN's lovely line here. Hold on a second. And just a second. Apple starts with the A, doesn't it? Okay, there's Apple. And we'll take a look what it's doing today. Did it make a new high? No, it's down a little bit, but we measured it to, there's your ABCD there, measured to 257. And here again, we went to 260, I believe, was the exact high. 259.24, missed it by $2. So we're going to see if these are working right now, and we'll go on from that level right there. Okay, now the last one that's the people have asked me about, of course, is wheat. And we've been trying to find a bottom in wheat for quite some time, and we'll see how close we came. If we're up today, I think we should be up, but I haven't had a chance to really look at it. There's where we are. And, it's actually down a bit. See, there's where, what do you think? I know something? I don't. Anyway, there's the wheat, and you can see we came down a little bit, rallied a little bit, so hasn't really done very much yet, but I still think it's got a chance. The low here was 501. We tested it here, and now we're coming back and testing it again. Let's see where we are this morning, and there's where we are. We've got live trading tomorrow, folks. I hope you can. There, we stopped at 618. The way these markets are going, folks, if I can't make money in these kind of markets, I should just pick up my toy box and go someplace else, because it's doing exactly what I talk about all the time. We've seen it in everything. And well, speaking of everything, let's look at the bonds here, because that's also one that was doing some really wild stuff. Where did the bonds go? Hold on a second, folks. I'll see if I can get it up here. We got the Shane man coming up. I'll post the bonds while Shane's coming on the air here, and then we'll take a look at them, because they're getting ready to be. Oh boy, they're getting to the Russell now too. Holy cow! Shut the front door and raise the rent. Yeah, this is a pretty wild one.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets. With updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we've got the Wolfman in the house, Shane Smolian.
Larry, can you
hear
hear
me? How
me?
you doing, buddy?
Can you hear me okay?
Boy, you're coming in like you're on the planet Mercury.
That's good or bad? Can you hear me?
I think it's good.
Okay.
Go ahead.
All right.
Tell us what you're looking at. You've been nailing this market pretty good, so tell the folks what you're watching.
Well, we are starting with our government shutdown today. We're in day 9, and just to kind of give a background on this, this is a pretty common thing that's gone on. So from 1976 to 2025, we've had an average of 8 days per shutdown. So we're a little bit past the average point. In Trump's first term, he had 3 shutdowns, and he had one in late 2018 to 2019 that lasted 35 days. So we could easily go another two weeks on this, or 2 or 3 weeks easily. So we will see. The Fed is still open, so that's a kind of a loophole there. So the Federal Reserve is still open during this shutdown, and the markets so far have seemed to do pretty well with this. But things can change, of course, quickly. So let's just take a look here. I want to look at the Fear and Greed Index simply because I do believe that this is a very important thing to look at right now, simply because what we're looking at here is a reading that's pretty low. I mean, S&P's near all-time highs, and so when I'm looking at something like this, you would expect to see this fear and greed much higher, 80 or 90 plus, but you're not seeing that. So, I'm interpreting that as a bullish signal that there's definitely more room here for the upside, just simply because this is a very low reading for a market that is at all-time highs. Now, of course, this is just one gauge, but it's kind of a curious thing to look at. Another kind of sentiment indicator that I like to look at here is the New York Stock Exchange lows and the highs. So I think this is a really good metric. This is also kind of a reversal sentiment indicator. So the basic idea here is that when the highs get above this line here on average, it tends to mark generally market highs. You can see if you go back here in time, you can see it does a pretty good job of that. And then the red line here, when it gets above this red line, it tends to be market lows into here for a good part of the time, especially when we had this big low into here, this recent low during the tariffs. We had this big spike here, and that was a very significant low. So I like to look at this along with the fear and greed. This is showing no indications that we're near a top according to this model. So this and the fear and greed to me tells me there's probably more room here to go to the upside. The calendar, we've had an interesting calendar here simply because most of our events here, we can't really see them, right, because the government shut down. So we didn't even have the non-farm payrolls that was supposed to be on the 3rd. So we're getting these reports that are getting we're basically missing these government reports. So we're getting some missing data here, and some people feel that this will increase the odds of another rate cut just simply because of the uncertainty that we don't know. And a lot of these ADP reports are coming in with really low, very thin payroll numbers right now. So it's kind of interesting. I have this calendar, and we really don't use it right now. For me, I like it better just because at 8:30 we don't have to deal with these reports when we're dealing with the trades. But this is just kind of on pause right here. So we just did come out of this full moon on the 6th, and we will hit this. We won't hit this new moon until later into the month in the 21st. So it's going to be a very, very late full moon in Libra at 28 degrees. So we'll see. By then, maybe we will have the government open, maybe we won't. But that's basically what we're looking at here. So on the what we look at here, one of the things I look at here is the Fed internals, and this is something that I have been tracking for a long time, since 2011 we started tracking this. And basically the flows of the market tend to follow what the Fed is doing. Now, this is very interesting because the Fed behind the scenes is very, very accommodative right now. They're having a very loose policy. We're having a lot of liquidity flowing into this market. But on the surface, they're acting very kind of hawkish, and they're acting kind of tough. And, the interest rates are at 4%, and the EU's at 2%, and Switzerland's at 0%. So it's kind of like the tale of two Feds there. The one that's talking in public is kind of very stern and cautious, but behind the scenes we're seeing some big flows come into this market. Now this goes all the way. I had labeled this. It's pretty crazy. You can see every time the Fed moves these flows, the market pretty much follows this. And the Fed, this is happening first. So the Fed usually leads the market. And this is getting into the market here. So this is a slide here to show just how strong the Fed internals have been. And so when you have a situation like this, I mean, nothing is for certain, but it's pretty hard for the market to go down just because you have this constant flood coming into the market, flood of liquidity coming in. And so, as long as I see this, I think it's, the market can have these periods where you have these little periods where it can pull back, maybe for a couple of weeks or so, but we really haven't seen anything sustained since these lows going back to April. And I think that's large part and due to what's happening behind the scenes with the Fed. And as long as this continues, this is a very accommodative action by the Fed. So I would throw this in the category of unnatural forces. We have some other unnatural forces going on right now. We have the government shutdown. We have the tariffs. There's a lot of very unnatural disruptors going on right now, but behind the scenes, the Fed is very strong. This is a very strong, conducive environment for stocks to go up in this type of situation. And again, nothing is for certain, of course, but if you go back to 2009, there's almost no documented cases of the market going down when the Fed is this strong behind the scenes. So this is why we try to look at what's going on behind the scenes so we can understand really what's happening, not just what people are saying, but really what's happening behind the scenes. And this is still a pretty accommodative. Now, right now, we're into kind of this bumpy situation right now with the shutdown, and there's some uncertainty. And then, we had this peace deal last night. So a lot of these markets like gold took a dive because gold tends to run up on uncertainties, right? So we have the shutdown and it's going up. But I think once we get out of the shutdown, I think things will become a little bit cleaner here going forward. So that's, when I look at if I have to look at one thing and tell you, what do I see here? I mean, this is really a dominant feature. I mean, we look at other things. We look at other cycles too, but this is dominant. Now, we've had the S&P here. This is in a buy 2 right now. And so one of the things that we try to do is look at 3 different angles for the market. We look at to really understand where this thing's going to go, we need to evaluate different concepts here. So the first one that we look at is going to be the Fed juice here, and that's what is the red arrows that we see here. And so that's currently in a buy here. The second one that we look at here is going to be the quad lunar, which we'll get back to this in a minute.
Got to pay a few bills. Shane, man, we'll be right back, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hey folks, back with Mr. Shane Smolian. Please continue, Wolf Trader.
Okay, so I had the wrong chart up there. That was like an old chart. This is the current chart for S&P. And so what I was saying before was we look at what we call the matrix. The matrix is going to be the Fed juice, it's going to be the quad lunar cycle, and it's going to be the BAT. And we make sure that two of the three of those are aligned in a direction. And so that has allowed us to capture most of this up move. We had one day here where it flipped, but for the most part, this has been in a buy 2 or a buy 3 for a long time, going all the way back here to August. And nothing has really changed. It's still into this bullish profile at this point. So it can flip, it can change, but so far it hasn't. I mean, it flipped for one day there, it flipped right back into a buy 2. So, to me, this still looks pretty good. Everything looks intact. I don't see anything crazy. If I saw that sentiment getting up, near 90% plus or things like that, we would. That's a little bit of a concern, but we don't see that. We actually see the opposite. We see people panicking right now at an all-time high. Which is good. That's a bullish sign. That means there's a lot of room. There's a lot of bears out there still, basically, as how we would interpret that. It's kind of like open interest, the same concept. Now, we do have some natural forces that we look at. I'm going to talk, by the way, this weekend, I'm going to have a webinar, so we'll just kind of point that out in case we run out of time, on cycles. I'm going to talk about the good, the bad, and the ugly of cycles. Because every system, every philosophy has its strengths and weaknesses, and so we do talk about these longer term. In this case, I have what I call the biorhythm. It's kind of like a cycle, but it's a little more accurate. It can run while the market's closed. So what we see here is we did expect this. We had a double rising cycle here. Going into this early October, we just hit a high here on this on 10.7. And then on 1023, the medium term here, the blue one, makes a high. Now, if the Fed wasn't so strong into there, I would say that this could be a potential for a turn on the markets. But the problem is the Fed is strong. And another force is going to come in here. I don't have the chart here. I have it for the subscribers. But there are some stelliums coming, Larry. And I know you like stelliums. This is one of your favorite things, right? You send me these emails all the time from NASA and everything. There's a big stellium coming, and it's coming from November. It's going to spike up into January, and then it's going to kind of meander around and spike up again all the way into the spring, into April. So, that's bullish. I mean, when you have that type of a stellium, and I think that's going to play into probably the changing of the new Fed. That happens next May. So I'm kind of looking, if I have my crystal ball here, if I looked at it, I think that's going to be a positive force going into next April or May, because everyone's going to be curious about what's going to happen with the next Fed chair. So, again, the little window here, I would say, for potential weakness would be a little bit after October, maybe into November. But even so, with the Fed being so strong there, it's pretty hard to believe that the market's going to go against what this Fed is doing. And I think a lot of this I don't know why they're doing this behind the scenes, other than they may be concerned that they're going to get blamed if the market crashes and they don't cut interest rates, because we're very high compared to the rest of the world. So maybe behind the scenes, they're trying to accommodate the markets. Nobody wants to get blamed. You know, if the market tanks, Trump's going to blame the Fed. That's the first thing he's going to do. He's going to say, oh, the Fed raised rates too high. I don't know the motivation. I just can tell you what the data says. The data says that there is a very accommodative Fed here behind the scenes in spite of this tough talk that we hear. So natural forces getting a little bit of a high here coming, but I don't even know if that's going to matter. The main thing that matters is that we follow the matrix here, because the thing about the matrix is it's going to take the market tape into account. One of the weaknesses of cycles is that it doesn't take market tape into consideration. So we saw this with gold. Gold had this big breakout, and a lot of these cycles were falling. So when we use the matrix here, we can always – it's pretty hard to fool the matrix because there's three components here. And even if the cycle is down and it's breaking out, we'll still catch the move. So like I said, we'll just follow what it is. If the market goes down, I tell people we'll short the market. That's not a problem. So I'm not really stuck either way on it, but from what I can see, if I just had to take out my crystal ball here, I still think this looks pretty bullish here, going probably all the way into next May. Interest rate cycles, we've talked about this before. So here's our planets here. We can come up with our crystal ball again. We have a cycle here that we look at. This is an 8.32-year cycle. And I've talked about this before. It's a four-wave cycle. And it basically across 8 years, it shows the interest rates, and it's pretty good. It's pretty reliable. And I've talked about this before, but it predicted this 2020 low pretty well into here. And so it had that first wave up. We're into the second wave down right now, and that's kind of where we are. It's kind of interesting that we're kind of into this period where it's a slight up period. And this is kind of what we've been dealing with this year, because the Fed has been slow rolling the cuts, basically. He did the one cut, and maybe he will or he won't do it again, or if he does it again, it's going to be a quarter. So I think he's going to try to slow roll these cuts. But I think once we get onto this 2026 period into here, there's going to be a new Fed chair in May. We know this for sure. I think he'll make it. But after that, you can see that this cycle drops, it plummets here. So I think Trump's going to put in somebody who's going to probably lower rates or be more dovish. And I think there's a good chance here that we do see the rates cutting. We know that the jobs market is weak. There's all kinds of confounding factors right now, like the tariffs. The tariffs count towards the GDP. I don't know if people know that. So you get these strong GDP numbers, and the jobs market looks like very weak. And so you get these weird numbers. Everything is kind of like one thing says positive, the other thing says negative. So we really try to look at this in pieces to try to understand what's happening. But I think from what I can gather, that the tariffs can count up to almost 1%. It's like 0.8% of the GDP. So that's why we get these really strong GDPs, and the jobs market's in the tank. Job market has been bad for a long time, even before Trump got in, but we're just kind of exposing it right now. So we're kind of seeing what it is, the sluggish growth. 10 years still into this buy two right now. We did get a pullback after the Fed cut rates into here, which was kind of interesting, but it's really not that surprising, simply because if you looked at when the Fed raised rates, it did the opposite too. And so a lot of times what happens is people get excited in the months ahead, and they kind of bake in the price, and then if the expectations aren't as dovish, it kind of pulls back a little bit. But I think that if we continue this cycle here, I think the bonds will go up. I think we will start to see a rally in the bond market. Probably that's going to be the safest bet, even more safe than S&P and Bitcoin, because I do think these bonds have to go up. And there's a lot of banks out there too that have a lot of paper that's underwater, like a lot of these long bonds. A lot of these banks, they didn't hedge, so they have these bonds on the books, but it's underwater, so that's not good. So I think the rates got to come back down to get, and we saw this in Britain with the guild operations, where they had these pensions that were underwater with the rates. So we saw that the Fed did this in Britain a few years ago. So I think they're going to have to. I think at some point take care of that paper. They're going to have to wait 30 years otherwise. So that's just something that I see too. That's a motivation, I think, from the Fed to lower rates. Also, this probably will become very, very bullish with the housing market. So that can factor in. So any questions on that? Nope. I hear some music here. Okay.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, so we're back here. I'm Shane Smolian from Wolf Trader Futures, filling in here for Larry. And so we were talking before about the S&P 500. I talked about some of the interest rates. I do want to look at some other markets, but before we get there, I just want to remind everybody, in case we don't get there at the end, I do have a webinar on Saturday. It's free. It's on YouTube. If you want to talk about market cycles, the good, the bad, and the ugly, we will talk about that. Every trading system has its positives, its negatives. So we'll talk about cycles, a fascinating topic. So we're going to start. It's going to be a multiple-part series, but we will talk about that. So if you want to join us, join us, 8 o'clock Saturday morning. We'd love to have you there in the chat. So we'll see you there. Wolf Trader Futures. I do want to look at Bitcoin, though, real quick. We do have these super buy rhythms, which you can kind of interpret similar to cycles. We had expected Bitcoin to be making this low into here on 922. It hits this low, and you can see this. The black one is the long-term super buy rhythms, and the blue one is the medium-term. And so you can see here that the black one's making this low. It's going to push all the way up here into December, January. And I do think that right now, Bitcoin's looking very bullish along with S&P. I think these two have the potential to really go, especially as the interest rates come down. Bitcoin has done very well. Something like gold, when things get more certain, like, for example, if we start cutting rates, if quantitative easing starts, that's when gold gets a little weaker. Gold is like the hedge against fear. So if we get into that risk on type of a trade, I think Bitcoin and S&P could really do well here. But with Trump, you never know. There's uncertainty everywhere. But let's just say that they do start to cut rates and we get into some type of easing. I think once we hit this 1023, Bitcoin has another opportunity to surge here higher, because we'll get the long term and the medium term both aligning to the upside here. And I keep these cycles separate. I'm going to talk about that in the webinar. I don't like to create these composite cycles because it's really kind of bizarre. You can't tell what's going on. So I like to see that we're in this long term buy here, and then there's a medium term here on the 1023. And we'll see you Saturday. So thanks for coming by today. I appreciate it. Have a great day, everybody. Stay safe out there.